A while back, I did a video on the Russell 2000. Now, the Russell 2000 is the small cap index, although that's a little misleading because the truth of the matter is most of the stocks that are on the Russell 2000 index have a market cap of about $1 to $7-8 billion. So they're not really small companies. They're more of a medium cap stocks or stocks that are waiting to go prime time. Think Amazon 2005, think Netflix 2015, 2010. That's what kind of stocks trade on the Russell 2000. And a while ago, I did a video on the Russell 2000 talking about how it was beginning to come back to life. And let's take a quick look at the Russell 2000. This is a chart of it right now that we're looking at a year. And if you look at it over a period of about 6 months, you'll see that it's been kind of lagging behind, moving sideways. Prior to that, it's been in a strong run-up all the way since October. Now, why has it been running since October? And I'll explain to you why. And I'll give you a little background and I'll give you a little update. Now, the Russell 2000 is a really important index because it has very high sensitivity to international and political events. So the Russell 2000, if you look at the Russell 2000 with the S&P 500 over a period of say a year, maybe 2 years, you will see that their correlation typically over maybe even 5-10 years is very, very close. But when you look at it over a 6 month, sometimes it'll lag, sometimes it'll lead, but it won't always move with the S&P 500 or the Nasdaq 100. And one of those periods began when Donald Trump, our past president, announced a trade war with China. There's a lot of stocks that have a huge correlation with China. And remember, these are smaller companies. They're not conglomerates like Johnson & Johnson or Procter & Gamble, where they have a million different products. A lot of these have one service or one product, and if it's made in China and there's an issue with China, boom, you're technically out of business. So a lot of friction began when Trump announced a trade war. And then it began lagging behind, and for a while, over a year, close to 2 years, it was lagging behind the S&P 500. But then something happened right around here, right around October, November of 2020, as you could see here, right around that period. And that was the debate that Trump had against Biden, and it looked like Biden was starting to win. And the Russell started leading. Why did the Russell start leading? Because the public assumed that Biden was going to be a lot friendlier to China than Trump. And now it looks like that may not be the case. Who knew? That's why politics are so interesting. So the Russell's now cooling off and coming back, and it's now trading at the 50-day moving average. And the question is, especially when we compare it to the S&P 500, and the S&P 500, as you will see here in a second, is just going crazy right now. I mean, look at this. This is the 50-day moving average. The Russell's trading right here, while the S&P 500 is trading all the way up here, making new highs. Now, the momentum levels on the S&P and the Nasdaq are through the roof, and I think it's going to cool off, and I think ultimately, the Russell's going to start climbing once again. I don't think the Russell's going to enter a bear market, especially with the number of stocks making 52-week highs, with the liquidity moving into the market, and with the consumer discretionary spending, and with interest rates being that low. But I think what it's doing is it's just taking a little pause from literally moving from 160 to 230 in a period of, let's see here, 1, 2, 3, 4 months. It's a little too much too fast. And a lot of the movers in the Russell, a lot of the movement was attributable to solar stocks and pot stocks. Those have been on a real tear. And right now they're kind of cooling off, consolidating. But I'm not looking at this as a major sell-off. I'm actually looking at this as a period of consolidation before the Russell starts coming back and springing back to life. And ultimately, I think the Russell 2000 is going to end 2021 on a very, very strong note. We're going to see earnings expectations move higher and higher. And I think ultimately, I think there's a really good chance that Biden is going to resolve the differences between U.S. and China in an efficient manner. And I don't think it's going to take very long. I think maybe a couple of quarters. But by the end of the year, I expect the Russell to continue moving substantially higher. Meanwhile, I want to show you a couple of stocks 5 stocks, just like I did last time. I showed you 5 stocks that are bucking the trend, that are outperforming the Russell. What I'm going to show you 5 stocks right now that are doing really well in the current environment that we're in, and talk a little bit about each one of them. So the first stock is IDT. Now, I like the fact that it's trading above the 50-day moving average, and I like the fact that it's basing right now. And if you look at the profile of the stock, this is a Russell 2000 stock. All of these stocks are in the Russell 2000. The stock has gained 319% over the last 12 months. It is going crazy. It's on a tear. It's a telecom stock that deals with multinational carriers, that provides broad range of telecommunication services to retail and wholesale. It doesn't deal too much with large-scale enterprises. It deals more with the retail and wholesale communication customers worldwide. And whenever you see a recovery, and I always tell this to all of our readers and viewers of Wealth Press, whenever you see a recovery, the small guy always benefits first before the big guy. For example, in this recovery, the apartment buildings are going to recover a lot faster before the large commercial, because it's just how it works. Credit card companies that deal with consumers recover faster than businesses. Consumers get money before businesses in a recovery. So I like IDT. I like what the company's doing right now. And what I really like about this stock is that it's bucking the trend on a relative strength basis. It's outperforming the Russell 2000. And it's been in a congestion pattern. So I like this over the next quarter. I think IDT stocks is going to do really, really well. Next stock is Joint. I've talked about this stock several times before. 1-year return, 360%. And this is a healthcare company that franchises chiropractic medicine. Now, chiropractors have been getting recognition a lot more over the last 20, 30, 40, 50 years. If you look at chiropractors back 100 years ago, it was just not, it was like voodoo. But now they're getting a lot of attention. A lot of people are going for chiropractic adjustments. My closest friend is a chiropractor, and I honestly think that they're working a lot more with doctors. And I think having a franchise for chiropractors is a wonderful, wonderful idea. Now, look at this stock. It's gone from the time I talked about it, it went from 23 to 50, it doubled. But I think it still has a lot of opportunity. This is not a healthcare company. It's under the radar. It's starting to make money. It's doing well, and I like it quite a bit. Now, what I may want to do is I may want to wait for a pullback because it's been running kind of hot. I would wait for a pullback to the 45 level before jumping in, but I like this company. And if you're looking for a buy and hold opportunity or a position trade lasting a quarter or two, I like the jointcorp.com a lot. They're doing something right, and there's not a lot of chiropractor franchises out there. Next stock, retail, Abercrombie and Fitch. When I was a younger guy, I used to wear clothing made by them. When I had muscles, anyway, long time ago, long time ago in a galaxy far, far away. But anyway, great company. Retail is starting to open back up. They've adjusted fairly well to the online process. They basically have t-shirts, jeans, casual clothing. Casual clothing are all the rage right now. It's a Russell 2000 stocks. It's a $2.4 billion company. They've gone 276% over the last year. Their core market is 21 to 24-year-old audience, which is why I said it was a long time ago in a galaxy far away. I'm 50 already. Yeah, 50. But nonetheless, clothing and casual clothing have become a lot more popular. They've become a lot more mainstream because working from home. And I'm going to tell you, even though COVID is ending in the US or beginning to end, or we're starting to see the end of the COVID tunnel, and waving bye-bye to it, working at home and working from separate units and using Zoom, that's just beginning. 10, 20 years from now, that's going to be the norm. Working in an office is going to be like, what? Why would I have to do that? So I think we're just getting started with that, and I think the company is doing very well. They're positioned to do well, especially, look, they've survived the hardest part. Now they're reopening. They've got the online connection, and they've got stores reopening all over the country. Again, I would wait for a pullback. I think we're going to go to the 35, maybe 34 level. As long as we're above the 50-day moving average, I would buy, but I would wait for a little pullback. Next stock. I've been talking up this stock since COVID. This stock is up. When I started talking about it, it was around 27. It's now at 71, and I think it's going to go higher. One of my favorite stocks. And I predicted this was going to happen. What does this company do, you may ask? It's a cool business model. They're liquidators. So let's say you have a big company and you're liquidating it because you went BK during COVID, a lot of companies, and you want to sell off your supplies, your chairs, your desks, your furniture, all those goodies. That's what this company do. They're auction liquidators. They liquidate business goodies. And I said, you know what? They're in the right place at the right time a year ago. Look at this thing. It's going crazy. And I see the stock continuing moving higher. Since I brought it up to everyone's attention, it's gone up over 300%. Yes, and you could look at my videos going back a year ago. I've talked about this company like there's no tomorrow. Financial companies are making headways. There's going to be enough liquidation, folks, for the next 5 years. And remember, new companies are opening up, and these liquidators are selling goods, used goods to them. A partner of mine and my wife, we were talking about opening up a franchise, and we were like, we can buy so many things that are used because so many other companies went out of business over the last year. I know it's sad, but that's how the business works. You take advantage of opportunities, and they make commission every time they sell. So you've got the world reopening. A lot of people are going to be reorganizing, selling goodies and selling them to newer companies that are starting up. This couldn't be in the timing for this company is perfect. Again, auction liquidators for businesses. They got enough supply to last them 5 years, and now the demand market is opening up. I would wait for this gap to get filled, maybe wait for us to move back for a correction to the 50-day line. But boy, oh boy, I love this stock. I don't like this stock. I love this stock. And finally, discretionary spending, headphones. Sonos makes headphones. The stock is on a tear. Over the last year, it's up not 300%, 380%. Audio video. Remember what I said? Consumer discretionary spending is going to heat up again. People are looking to travel. They're looking to go places. And when they do, I just flew to Bahamas and back. I had headphones. Sonos. They make those little speaker boxes, boom boxes, which I love when I'm when I'm watching my movies on Netflix. Outside in the summer, I have my little sound box, my little boom box. I have my headphones, Sonos. The company is great. It's right now on its way to pulling back. Wait for it to pull back, I would say to the 40 level, 39 level, and then go in hot. Now, again, Russell 2000, it's not entering a bear market. It's simply pulling back. It outperforms on a long-term basis the S&P 500 because smaller caps have more volatility. And let me tell you something statistical. On average, the Russell 2000 bullish stock outperforms the S&P bullish stock by a factor of 6.5 to 1. That's right. That's why you've seen 300 return, 380% return. So Russell 2000 stocks are hot, and I'm targeting the hottest ones. I like IDT, real good stock. The Joint, Abercrombie and Fitch, and Abercrombie and Fitch, ticker ANF. Riley is so hot right now. And Sono. And I hope that helps. Folks, there's a new stock market quirk. Yes, a quirk that Future of Wealth head trader Lance Ippolito is calling blockbuster breakout date. Man, this is getting interesting. He says these dates are only tied to a certain group of stocks in an explosive part of the healthcare sector. That's probably why most people don't think to trade them. But the small band of traders who've been trading these blockbuster dates besides Lance have already had a chance to cash in on some powerful big winners. I'm talking about gains like 115% on Teva, 175% on BHC, even 210% on CRMD. So Lance now wants to show everyday traders like you how these explosive dates work and how anyone, and I mean anyone, can start targeting biotech stocks like these today, right now. Click on the link below to act on Lance's newest profit date strategy. And folks, make sure to like this video, subscribe to this channel if you're watching on YouTube. You've got to stay one step ahead of the market by being the first to be notified when we post our next video. And have a great day.